All right. Hey, everyone. Mark here, Mark B Markets. Thanks for joining me for another Bitcoin video analysis session. Okay, today is Monday, and I am simulcasting on TradingView and on YouTube. So here, let me just move this over here for a second. Hold on. I just need to adjust this so I can see what's going on. All right, make sure I'm streaming over there. Okay, you guys, cool. So anyway, I want to welcome you all. If you're not sure how my stream works, or if this is the first time seeing me, again, hello, my name is Mark B Markets, and let me explain to you quickly how this works. Okay, so first thing I'm going to do in this stream is I'm going to go over the economic calendar, something that you should do each week, okay, especially if you trade Forex. Then I'm going to go over the Bitcoin analysis. All right, we're going to talk about what's going on here. Hopefully you all read my article yesterday. Okay, a lot of people give me a hard time when they can't understand risk and probabilities, and then this happens. Okay, this is when I get all the messages. Oh, how were you able to see that? I wasn't. Anyway, so we're going to go over that, and we're going to talk about potential setups and what to expect as the week unfolds. And then I'm going to answer your questions. Okay, so if you have a question about a stock or an altcoin, please share it in the channel now. One symbol per person, please. Don't send me 10 symbols because I'm only going to have time to look at one. If it's an altcoin, please make sure to put USD or USDT after the symbol so that I know what it is. Okay. Also, if you are on TradingView, make sure to refresh the browser because sometimes you can't see me on there and you just have to refresh the browser. All right. So now would be a good time to start sharing your questions on there if anyone's watching me over there. All right. So with that being said, let's get this thing started, shall we? All right. So as you all know, this is for educational purposes only. For investment advice, please consult a licensed investment advisor. All right, let's take that slide off and let's get into this. All right, so I'm going to make this chart bigger here in a moment. Let's just say hello to a few people. Get Alex. All right, good to see you. Elijah's, Tillin, Joel. All right, Bill, good to see you all. Matt, Ramin, hey, how are you? Good to see you. Kim, all right, Peter, got the regulars here. Mr. Plow. All right, so let's make this chart bigger. And first, now here, let me move it over to this. So let me mention first the economic calendar, okay? And this is, I want to make this part interactive. I want to see who's paying attention. So this is, we're going into the first week of February, right? Have you checked the calendar? What comes out this week? Can anyone tell me of importance? Now, whenever you look at an economic calendar, you're going to see all kinds of stuff on it, all right? Most of the stuff you see is not important, but there are certain events that occur regularly that carry all the weight. Can anyone tell me what that is this week? Can you tell me? Let's see if anyone can tell me. What's the big economic event this week? Check the calendar. I'm making you guys do it. I mean, I can just look at it and tell you, but I want to hear it from you. Okay, so what is it? TradingView has its own calendar. You can check that out, or you can check out any other calendar. Thing is, when you look at an economic calendar, you want to make sure you only look at the most important events, and even out of those, you have to filter it out. So no one's told me yet. What is the most important event this week? Can anyone tell me? So, because Friday is going to be the first Friday of the month, is it not? First Friday of February, right? Because what, Wednesday is the first, I believe. So Thursday is the second, Friday is the third, right? What comes out that day? How come no one's telling me? Come on, guys. You guys should know this. Check the calendar. Don't be lazy. If you guys don't check the calendar, you're going to be, you can really become surprised when something unexpected comes out and you're like, I don't understand. Anyone? No one's telling me. Can you guys hear me? I've been having internet problems today, by the way. Okay, so if I get cut off for whatever reason, it's my internet. I don't know what's going on here. Not one person has mentioned it. Anyone? Come on, I'm waiting for this. Where is it? Anyone? Are you guys looking at the economic calendar? Maybe they moved the event to next week. No one's saying a word. I'm wondering if my internet connection's working. Can you guys hear me? How about that question? Yes or no? Can you hear me? Wednesday. I get over here on TradingView. FOMC and earnings. Ah, okay. Someone's paying attention over on TradingView. Okay, Bueller, right. All right, you guys can hear me. I don't know. The guys on YouTube here just completely stopped answering my questions. Maybe they can't hear me. Maybe I'm cut off. All right, so you guys got the FOMC. Okay, well, the quarterly reports, that we're in that season, right? And those can have a major effect, depends on the company. But I'm really looking at economic events, right? So what about Friday? Anything? Anything on Friday? You guys should be looking at that calendar. I know I have to spend a lot of time on this, but you guys need to get this, because if you're not in the habit of doing that and you get lazy, you're going to get caught. Okay. Again, this is a matter of risk. I don't see anyone typing in here on this other channel. They must not be able to hear me. There are a lot of answers on YouTube. Oh, I can't see them. Okay. Thank you for pointing that out. I probably need to refresh something over here. Hold on. Thanks for letting me know that. What's going on here? I told you I'm having internet problems today. The chat is full. Okay, so my chat stopped. All right, let me try refreshing this. Thing is, if I refresh this, it's gonna really throw things off here. Okay, hold on. Is there another way I can refresh this without throwing things off? I don't want to do that. All right, hold on a second. I'm gonna have to. I hate doing it like this because it screws up like everything. I got thrown off here. All right, now I gotta set up my charts again. Hold on a second, you guys. This is why I wanted to avoid refreshing, because it was going to throw my charts off. I'm telling you all day today, internet problems. Okay, you guys can hear me. All right, NFP. All right, thanks for pointing that out on the other chart, on the other stream here, because I thought there was something wrong. Okay, just give me a second, you guys. Sorry. All right, so hold on. This is why I was trying to avoid the refresh. All right, I'll get this up in a minute. I'll get my charts up in a minute. Appreciate your patience here. The answer I was looking for, by the way, was the NFP. It's first Friday of every month. That's the biggest economic event we have each month, and it comes out the first Friday. And I point that out. I emphasize that a lot. Okay, hold on. All right, I'm just getting my screen up here. Sorry, it's gonna take me like a minute because there's a lot. It's a pain. It's a pain in the ass. Sorry. Try not to use bad language here. I'll have it up here in a minute. Okay, should have my screen up. Okay, you should see my screen again. All right, let me continue now. Let's move along. That was my economic calendar for 10 minutes. All right, so you guys got it. The whole point of that is not to trade, just so you know, not to trade the event, but it's to prepare for the risk. Okay. Now you realize we're going into the week. We're starting the week off red, right? And we have NFP on Friday. So you have to understand going into that number, right? Thursday is usually ADP and stuff like that, right? Going into that, Wednesday, Thursday, Friday, especially Thursday, volume can get very erratic. and movements can get very random. Now understand, markets are highly random to begin with. Okay, hopefully you guys read my article yesterday on TradingView. I wrote a whole little paragraph about that. You need to understand that. People ask me all the time, what's the thing I should learn as a beginner? Learn that markets are random. All right, that's the first thing, because that is very, very meaningful. All right, so before I get into any rants, we talked about the calendar, so you guys know it's coming out, right? Let's talk about the Bitcoin analysis here, because it's like the main point of the title. So as you can see on my chart, right, I wrote that article on TradingView yesterday. I wrote it when the candle was here. And I said in that article that there was a long signal. There was a buy signal, and that was off of this inside bar. But I said it was a low probability buy signal and not worth taking any trades on the swing trade time frame. I said that very clearly in the article. And there were two factors that pointed me to that conclusion. Number one, the resistance, right? We were near a resistance. So the location. Number two, the wave count. And I pointed this out. This is the wave count, okay? It's a small wave count. Now, I'm not sitting there going back to like, oh, let me check Bitcoin back 10 years and then try to like figure out that wave count. I'm just looking at impulse structures. That's it. There's one right here. That's an impulse structure, right? And that starts what, in the middle of December? I can count 5 waves in this structure, right? Now, just because the moment you can count 5 waves doesn't mean that it's going to turn. That's why I wasn't in a hurry to call a short either, because this thing can extend into a resistance level. But the main point of my article was this thing, if you can count 5 waves and this thing's starting to hesitate, there's not much left in it, okay? There's not much left on the long side. So buying up here is low probability, high risk, something you cannot see. Now, if you're caught in that and you're caught from the top, you can only blame yourself or the fraud that got you stuck in that position. Go yell at that guy, okay? Because there was absolutely no reason to get long in this area as a swing trade. It basically means you're incapable of controlling yourself. It's an emotional thing. And that's what gets the herd long, okay? They caught you on the long side, and now you're stuck. And this is enormous risk, because the thing is, now I'm looking for the long, and I'm looking for the long at this area right here, okay? I drew this on my chart like 2 weeks ago. This would be a nice, convenient location for a wave 4 bottom to develop. When I say wave 4, I'm talking about wave 4 relative to this structure, right? So that basically puts it inside of here somewhere. Now, keep in mind, if wave 1 is compromised, right? Now, this is the wave 1 of this temporary structure, right? Or a smaller structure. Don't get mixed up with the bigger waves, right? It can become very confusing. But this is wave 1 over here, okay, of the broader structure. So the wave 4 relative to that should unfold into this area. That is what wave counts help you predetermine. Now, is that some kind of accurate forecast? No, it's a likelihood, because markets unfold in a structural way. Emotion tends to unfold in a geometric way. That's the whole point of counting waves. It doesn't give you any kind of precise thing to do, and it doesn't give you any kind of advantage. Please keep that in mind. A lot of people, they don't know what an advantage is, and they like to use that word a lot. Oh, follow my thing and it's going to give you an advantage. No one has an advantage. If you're a retail trader, you have no advantage. And all these clowns on YouTube and everywhere else, and they were all bragging about, they have no advantage either, okay? So who has an advantage in this game? Usually industry professionals that work for large institutions. There are political advantages. There are microstructure advantages or inefficiencies, and we can't compete in that game. Okay, so you can forget about that. We have to work on the behavioral aspect, and we have to isolate temporary inefficiencies that are based on behavior. Okay, like getting caught in a situation like this. These traders that are caught at this high, they're stuck. Now, like I was saying, the risk. I'm anticipating the pullback to this location followed by a setup. That's the pullback. So if you're a beginner and you're looking for a swing trade, this is the place to wait for. But you don't just step in front of it. You need a setup to confirm, okay? But the risk is this. If you got long here, the risk that you took is not just a pullback to here. The risk that you took is it pulls back to here and then breaks and then starts testing these levels, which is unexpected, okay? If price happens to test this zone in here, then this wave structure, this wave count becomes irrelevant, okay? Wave counts change, and you need to understand. Right now, we can say wave 4, looking for wave 5, right? And wave 5 theoretically should work its way up to there, right? Before we have a broader pullback likely to unfold, but we're not there yet, right? We have to see the wave 4. Keep in mind, wave 4 typically, right, on the average is like 3 waves. Corrective waves are typically 3 legs. So this is obviously the beginning, but it doesn't have to be 3 legs. It can be a complex correction, which means it could be like an elongated compound mess, right? Kind of like, kind of like when it looks like this right back here. See, like this kind of action, it can turn into something like that, where it's a consolidation and it's very confusing. You're going to see a lot of frauds come out with a lot of nonsense. If you follow frauds and you get lured by their nonsense, like I said, that's a behavioral problem, and the only one you can blame is yourself, okay? So my point is this: if you're long, you took a lot of risk, okay? Because we don't know. There's no way to know if it's going to break and overlap wave 1. There's no way to know. A surprise news item can come out 3 weeks from now that no one's talking about right now. This happens all the time, okay? Like FTX in November. No one saw that coming. All the experts on these platforms, not one person mentioned it. All these technical guys, right? The charts tell us everything except the FTX thing. Oh, yeah, right. The charts never saw that one coming. Okay, that was over here. No, never saw that coming. By the way, I had a short in play at that time, and that short actually reached its targets. I had no idea FTX was happening. Okay, it was all based on structure. Anyway, so my point is, before I go off on these tangents, my point is the higher probability thing to wait for as a swing trader is this level here. Okay, so that's basically 20K to 22K or 21K, something like that. All right, in this area, that's what you're looking at for a long if it confirms. Now, what about the short side? Is this a short? Well, this is almost an outside bar. It's not an outside bar. If this candle high was just a little higher, it would be an outside bar. Perhaps on other charts, like if I pull up another Bitcoin chart, it may be an outside bar. Let's see. No, it's still not an outside bar. Okay, that's a Bitstamp. So the thing is, it's the same idea. Okay, it basically engulfed the green candle before it, basically. So upon the close of this candle, there's an aggressive short here setting up. It's aggressive because you're against the momentum, and it doesn't mean that we will get follow through. It may only pull back a little bit. That's the risky part when you go against momentum. This general momentum is bullish. You can't ignore that, okay? Wave 4 is likely to unfold, but it doesn't mean it has to. So you can't get opinionated, right? If you're interested in the short side, I mean, I'm thinking about calling it, I don't short Bitcoin, but I still make the calls if people are interested. I made the call for this over here. That got squeezed like the next day, okay? And I have not called it since. And now we may have something here for the counter trend or the counter momentum short. If I call that short, again, I'm going to be targeting somewhere around here, maybe the lower part of this range, like this rectangle here, the lower part, right? Just to give it some room to fool around, because in theory, it can fool around all the way to here and still be a wave 4. Okay, you really need to understand how wave counts work. So that's a possibility. Again, targets really, where you exit these things is a function of how much you risk. That's a very important thing. Everyone always says, well, how come you can't just use like fibs to, find a target and maximize? If you're stuck on that, you got a long way to go. Okay, this game is a function of risk, not maximizing profit, which is what, that's what everyone wants to hear. That's why I'm so unpopular, because I shed light on the reality of this game. People would rather be lied to. Okay, most of you, I mean, look, when I started out in this game, I had no idea, and I believed everything that was told. I believed all this nonsense. I believed that charts can forecast blah blah blah. I had no idea markets were random. I had no idea. That took me 15 years to figure out. Okay, and what that actually meant. All right. So anyway, so stop consuming the lies, and things will start to improve. So here's the thing. So that's my Bitcoin analysis. Let me know if you have any questions about that. Now, I don't care what news came out. I don't care, why it's pulling back. The probability was there. Okay. The probability of this occurring was there, and that's all I'm concerned with. I don't care why. All right. Let me look at some questions here. I saw there were a bunch of questions. All right, let's see. Okay, so we got questions on the NASDAQ. All right, I'm just going back here. Let me just see. So you guys have any questions about Bitcoin, let me know. And I'm going to start. Okay, FOMC's on February 1st and big three companies. Okay. All right. Hey, Mo, how are you? From Iran. Cool. Iranian, how are you? All right. Do you think the GDP report of Germany is what's causing uncertainty? I wouldn't go by that. Okay. The GDP of Germany obviously is going to be a reflection on the euro, and maybe they can point to some global things. But again, they always like to point fingers. Okay. Don't go by that. I had no idea about Germany's GDP yesterday when I wrote my Bitcoin report. And that was when that candle was green, solid green. Like it looked like it was going to 50K over the next 5 minutes. That's what it looked like. And if you read the headline, I talk about the pullback. Okay. And there was no red candle at that time. So I was basically anticipating based on the probability, not on what I saw. You understand? You have to understand something about candles in charts. When we look at the current candle, right? When you look at this current candle right now, you have to understand that we cannot see what's actually going on here. You think you can see, oh, it's a red candle. It's pretty obvious. Well, we cannot see what's actually going on inside the candle. You realize by the time we get this flicker of like price, what is this? 22,677. You realize this is old news. This movement right here occurred a second ago. You're like, oh, that's pretty new. Not in the microstructure world. There are people taking advantage of all the fluctuations that occur between when the price actually starts from wherever its source is to by the time we see it on our chart. Understand that, okay? That's a microstructure game. My point is, we don't actually know what's happening here, okay? We see some previous history, and based on this, it's reasonable to expect momentum to continue. Okay, until it reaches a level where momentum is likely to change. I wrote in my article that we're in an area, 25K in particular, is an area where we can anticipate selling activity. Okay, before we got there, and it turned sooner than that. Okay, well, we're in 24K. What was the high here? 23,961. So basically 24. Never touched 25. But the general area was a high risk area on that idea. Does that make sense? Okay, I don't want to confuse people. All right, let me start going through some questions here. Okay, so I'm going to start with YouTube. Okay, cool. Alex, please take a look at USD RON, Romania's currency. Okay, because my country's inflation rate is 17%. Man, don't want to move to Romania, that's for sure. All right, let's take a look. So this is the Romanian leu. Is that what it's called? All right, let's take a look at the weekly. All right, now look, this is the dollar against the Romanian, right? And so this is a reflection of the dollar. And the dollar, as we know, has had a pretty significant pullback in recent months. But I've been saying that this dollar pullback is very suspect, right? I'm still generally bullish on the dollar. I don't consider this a bearish trend. It's a pullback, okay? I will start looking at this more of a trend when we see resistance levels stick. We broke a support, but I don't know how resistance levels are going to behave yet. All right, now it's possible that resistance levels start to hold, and this would be your first one right around here. All right, which means we can test that $4.78, 4.78 on this thing. So just keep that in mind. This could be the change of a trend. It could be, but you have to understand, we have not seen a significant retrace in the dollar for like 2 months. The dollar has just been stagnant and just kind of pushing lower and lower and lower. I think it's a setup, okay? So right now, look, previous weekly candle is a bullish pin bar, and this thing is trying to come out of it. We've seen pin bars before, right? And it's only pushed a little lower, but I suspect, we get the bounce, and because we haven't seen one. We have not seen any bullish candles for quite some time, any significant bullish candles. So I think that bounce is coming, that retrace is coming, right? If that's the case, then, you're looking at dollar strength, and these things can start working their way higher. So you're looking at euro short, you're looking at bearish pressure on the S&P and the NASDAQ. That's what you're looking at. That's what we're facing, right? If the dollar can put a significant bounce together. Now, I try not to have any opinions on this. I'm just looking at levels. I'm looking at structure. But, in this location, I have a very hard time going short, okay, shorting the dollar. So does that make sense? It's a good question. Let's move along here. Okay. So you bought some at 450. Okay. So yeah, you have some room. 5 makes sense. 5 makes sense. Eligius. All right. ZN1 bond market. So you guys are good. You guys are asking for some important markets that we need to see. So this is the 10-year note futures, right? I look at this all the time. Now, as we can see here, this thing has the futures have been pulling back. Right? We had this ridiculous rally back in December. It was mindless, right? Just a short covering, whatever. Everyone thinks everything is okay. And now look at this. This is not okay. This is bearish. We have a lower high. Not only that, we can argue now we have a little mini head and shoulders. I don't put a lot of weight on the head and shoulders, but I do put the weight on the lower high. Not only do I put the weight on the lower high, but I also put weight on this. Right there, that's a failed high. So the thing tried to break out, right? And that caught my attention. I remember when that was taking place, and I said, the bonds may have changed, right? So we want to start maybe making some adjustments, but we have to see how the bonds behave. Do they continue? Looks like they're not continuing. Looks like they're pulling back. Okay, which means rates are now working their way up. But here's my suspicion on something like this, because the bond market takes a while to do things, start to prove anything. Right now, we have this entire range. See this entire range on the bond market. So the low of the bonds is 108.26, right? The high of the bonds, the futures here is 116.08, right? That's a pretty wide range. Now you realize this market can stay inside of this range for a while. And if it does, if it stays in here, so let's say rates go up a bit, because this is obviously inverse to rates. Rates go up a bit, but then they start bouncing around and they don't really go much higher, okay? If they stay inside of this consolidation, it is my suspicion that the market may get comfortable with these rates if rates don't really go significantly higher. Now, of course, the Federal Reserve can say something and change this whole outlook, right? They can say something dovish like, oh, we're going to lay off the rates and that will change things here. But right now, obviously, this market is anticipating rising rates because it's selling off a bit, right? So you have to watch out for that. Don't judge this thing on single candles. Like, don't sit here and be like, whoa, this is bearish right here, right? That's a minor movement. In order for the bonds to really have an effect, you need to see it over here, okay? Like if we start pushing those lows, that means rates are pushing again. And I would be expecting bearish action everywhere else. I'd be expecting bearish pressure developing in Bitcoin and the stocks, all that stuff. But until we start doing that, I'm suspecting that the market may get comfortable. Meaning, if it's trying to turn itself around, it may find a support, and we're not looking at a completely pessimistic market ahead if the bonds cannot push these lows. So the bonds have some time, right? That can take a couple of months, what I just described. So please keep that in mind. The lesson to be learned here is don't overreact to this little minor nothing, okay? We have a range. We need to see how this thing behaves in the middle of the range. We need to see if it gets to the low of the range, or if it just gyrates around the middle, then we have stagnant rates, okay? They've risen since, where we were a year ago, but if they're not going to rise anymore, that's a positive for the stock market. Will see that as a positive, which will invite money into the system. Okay, so please keep that in mind. Now, I look at that stuff, but I don't sit here and like, get these concrete opinions. The market changes, so you have to make those adjustments. Does that make sense, you guys? So that's the bond market. Very important. You should check this chart every day just to see how this is how this is developing, but don't jump to conclusions on small pieces of information. All right, so Tillen answered that question. Okay, cool. Just catching up here. Let's go to TradingView. Let's see what's going on over here, you guys. Okay, hold on. Just trying to catch up. Let me just open this up a bit here so I can see what you guys are saying. All right, so FOMC. Okay, got it. All right, I answered the GDP from Germany. Most people is excited about Fed will pause soon and then pivot, cut rates. But if we analyze history, bear markets get biggest by, well, not really. No, cutting rates is actually, they cut rates in response to a slowing GDP or a slowing situation. They start cutting rates because they want to stimulate, right? And it takes some time before those rate cuts start to find their way into the system. But the market trades 6 months in advance typically, right? So they start pricing this stuff in. The market is obviously anticipating improving rates because, I mean, look what it's been doing over the previous few months or whatever, a couple of months, right? So don't get stuck on an opinion like that. If the Fed starts changing their tune, then I think we'll see more of a stable stock market because it's going to start to invite money in, and over time that money will find its way into the stock market. That's typically how it works. I mean, all that nonsense that we saw at the peak of 2021, all of that nonsense was a result of the Fed decisions made in 2020, right? All that free money that they created. That's what that was a result of. All right. So let's see what we have here. Hey, Milad, how are you? Good to see you. All right. I closed my XRP position with 40% profit. Okay, cool. Nope, that's a nice profit. Nice job on XRP there. Thanks for sharing. Can you look at GLXY? Okay, sure. Let's take a look. GLXY. Okay. That looks very similar to the bond chart, does it not? Let's take a look at the weekly chart. So, I mean, this looks very similar to that Bitcoin move, right? I mean, look at this, right? This is the weekly, right? Bitcoin had that ridiculous move, sucked everyone in, and then look, right? It goes into this area, this is an old support, new resistance area, and it finds resistance. What a surprise! Okay, that's why I keep telling people, don't be buying into these highs. It's a bad idea. So what you have right now in this thing, again, it's following Bitcoin. This clearly it's following. You have this outside, this is an inside bar. Let me open this up a bit more so I can see what's going on here. Oh, no, it's not. It's neither. This is just a bearish candle, okay? But the current weekly candle looks like it gapped a bit or whatever below that low of $5.15. This thing is at 502. Okay, this is right here is a sell signal, all right, on the weekly chart. So not exactly a good time to be long. In those type of situations, if you just got in, it's really, you have to consider how you're going to mitigate the risk, right? The next support on this thing is over here, and that's around $4, $4.25, around there. That's what you're looking at. And you have on the daily, there's a double top. This thing breaks, right, and Bitcoin like pushes supports, that's what you're looking at, okay? Potential, there's a high potential that this thing retests that level, and that's really the place to be looking for a bullish reversal if you're looking for longs on this thing. This is probably not the best choice for a swing trade, okay? But that's what it's looking like. If I was going to short something, I probably would not short this. I don't short coins. I don't short Bitcoin. But if it looked like that, I mean, if like, for example, if the euro looked like this, I'd be into shorting that. But this situation right here, yeah, I'd look for that pullback, because if Bitcoin breaks, you're looking at a test of lows. Okay, again, you don't want to get caught in that. So this one might be better for a bigger picture, like longer term. type of, you buy some inventory and build inventory over time, and you'd want to wait for that pullback. So I hope that helps. US GDP is positive, right? After 2 negative quarters. I don't know what the GDP read, what the result is, because I don't look at the actual numbers. I just look at the reactions. So whatever it is, I see how the bonds adjust, because the bonds are going to be very sensitive to something like that. The dollar is going to be very sensitive because the Fed uses that, right? The Fed is typically looking at that data. So I look at how the bonds adjust, right? And we just talked about the bonds. Take a look at the dollar. Okay, let's take a look at the dollar index. Who's asking me that? Mind, okay, DXY. So again, dollar index, something you should be looking at. Now, this, we kind of got a hint of this from the Romanian currency situation, right? USD, RON, whatever that was. I mean, it's the same chart, right? And the dollar has been sitting at these lows. I mean, look at this price action. Let's point something out. Again, people, they don't understand how to put a trend into perspective. And if I sit here and say the dollar is in a broader bullish trend, they'll say, no, you're wrong. This is bearish. That's a short-term trend that's bearish. I mean, this goes back, what, 2 months maybe? Something like that. So we can argue that that's more of a short term, all right? But the long term, going further out, this is not exactly bearish, right? So maybe it's turning bearish, and maybe this is the first leg of it, possibly, but we have not seen a bounce in the dollar. So what happens when the dollar bounces, right? So we're going to see some bearish activity across the board, most likely. The dollar will put pressure on things. Where can the dollar bounce to? Here. It's the 104s, right? The dollar high 104.85, so 104, 105. This is an old support on the dollar. So old support typically becomes a new resistance. So if this dollar bounces and you have the failed low situation, there's a buy signal in the dollar on this time frame, right? This area right here, there's a buy signal present. The question is, can it follow through? If it follows through, like for example, if NFP comes out dollar bullish for whatever reason, I mean, you're going to see dollar start doing this, okay, working its way up. So this zone, you have an entire zone. I pointed out like the extreme resistance on the dollar, but you have a zone. And that zone is this entire area right here, right? This is really the zone. So if dollar starts pushing into there and you're looking for the next dollar short, that's the place to be looking for it, okay? Not here. So like, for example, if you're shorting the euro or you're looking to buy the euro long would probably occur somewhere in there. Not now is too early. Okay, so for people like thinking I'm going to buy the euro and take advantage of this rally, you're buying the top of the euro, most likely. That's what the dollar is telling us. It's the inverse. Does that make sense? Okay, so good question on the dollar. So yeah, you should really, you guys are asking me for good charts. Bond market, dollar. I mean, those are important. No one's asked me about the stock market yet, but the stock market, is an important thing too. Okay, hey, good to see you. Amo Chicken, good to see you. Can you also explain the bond situation in Japan and why many think it's okay? So I'm not exactly familiar with the bond situation in Japan, like in particular. Like I haven't looked at the bond chart of the Japanese bonds. But one thing about Japan, I know from historically, is cheap yen creates inflation because you can borrow yen. There used to be this thing called the carry trade many years ago. It used to be very popular in the Forex world. And you could basically buy something with a high interest rate, like British pounds at the time, right? And sell yen. And what institutions were doing, people that can borrow huge sums of money, they would borrow like $1 billion worth of Japanese yen, and they would buy pounds with it, and they would just collect the interest, right? Because cheap yen, the interest rate on the pound was a lot higher, so there would be like a locked-in profit or a carry trade. It was a risk-free profit, right? That doesn't exist anymore like that. But the point is, cheap yen can lead to, it can be an inflationary pressure. That's how I understand it. Now, I don't know what the situation is with Japan and their rates. I know Japanese rates for the longest time have been like zero. Right? Yen has been very cheap for a very long time. So, I don't know, but it can play that role. Thing is, they are not the world reserve currency. Okay. So just something to keep in mind as well. So don't get confused. Don't get too confused by things like that. things like that, like all these economic things, some like you're trying to make sense of it, and then the market may do its own thing anyway. That's what you have to realize, right? That's where technical analysis shines, because technical analysis gives you a reflection of reality that you may not see by looking at all this economic data. Some of this economic data is just not, it's not relevant, or it's old, it's not relevant anymore, right? Or it hasn't caught up yet. It's like behind. Meanwhile, the market is pricing in something else, right? So that's why having a good grasp of technical analysis. And when I say technical analysis, I'm not talking about oscillators and all other garbage that everyone else pushes on you. I'm talking about using elements of a chart that really give a clear perspective of how to formulate an expectation, okay? Like looking at price geometry, price structure, levels, and formations around those levels. Because like I said before, price action is typically a reflection of human nature, right? Or human emotion. Human emotion unfolds in geometric ways. So having a good grasp of that, or if you can understand that, that can give you better perspective. And then you can apply the economic stuff as a backdrop. Say, oh, well, okay, based on this economic environment. And that's what I do with the bonds and stuff like that. I was able to pick the top of the stock market because of what was going on in the US bond situation at the time. Everyone was focused on buying stocks. This was December of 21. Watch my videos and read my articles from that time. I was saying, stay away from the stock market. The risk is high. No one wanted to listen to me because the market was making new high after new high. All I could tell was it was extremely vulnerable and a bad place to be investing. You want to day trade, that's another story. But investing, really high risk. And everyone got caught in it, okay? Because they can't see beyond their own feelings, right? You can't. I tell people there are two major obstacles that keep people back in this game. Number one is yourself. If you can't get over yourself, you will never win, okay? That's number one. Number two is the industry and all the obstacles that they put in front of you. If you can't see beyond those, you have no chance in this game, right? You're just basically just a source of profit for, a Forex broker or something. Okay, so let me see. I hope I answered that question. Good question. Can you help us understand how to spot reaccumulation? No, that's a good question, but I don't look at that. That's you're getting into that. What's that, guys? I can't remember the name right now. I know what you're talking about, but that just you're looking at these consolidation areas and then like making these assumptions blindly, like, oh yeah, there's accumulation going on over here. I find no value in that. Okay, it's like everything else, because things change, right? And some new piece of information comes out. Just because supply may be developing somewhere or whatever, right, doesn't mean that it's going to stay there, because some new piece of information may come out, right? Stuff like that does not assume markets are random. You always have to keep that in the back of your mind. Something can change. Some unexpected piece of information reaches the market, and now everyone has to, all these people that were taking this position all have to get out because they weren't expecting this. That's called random. And that's why you can't forecast the market, okay, over the long term. All right, so let me just catch up on my other chat here. Good questions, everyone. All right, if I missed your question, please ask me again, because sometimes when I'm skipping through here, I miss your question. All right, so Peter, can you look at Cardano? All right, let's take a look. Cardano, USD. So how's this thing been doing? So, this used to be like one of the biggest hype coins. Now, very similar to like that Bitcoin squeeze, right? I mean, look, we saw this squeeze across the board. Look where it's gone to, and look how quickly it's giving it back, right? I mean, look at this candle. The thing is here, don't focus on the red candle. The thing is, focus on the level. This level was a big warning. And we've seen this across the board, right? We saw this on Bitcoin. We saw this on that other chart. Someone asked me, the other altcoin. It's the same idea. Old support, we rallied right back to it, okay, is now a resistance, 40 cents, right? This thing is now at 37 cents. It turned right around, right, just as it was getting into that area. So again, anyone that's foolish and anyone that can't control themselves, or anyone that likes to listen to frauds who have no accountability in this game, and who hide from it with fake names, they get caught here. Okay, so this is a bad place to be long. If you're long, I can't help you. All right, there was a high risk place. So looking for the pullback, that's all you can do. The thing is, I look at the weekly chart because the question that this has to answer is, has the weekly trend changed? And not really. This might be the beginning of a trend change, possibly, if it can produce a higher low somewhere over the next couple of weeks. But Bitcoin will also have to produce a higher low, and Bitcoin will also have to break out, right? This thing can't break this 40-cent resistance, then it's really nothing more than noise, okay? Nonsense. So all this chart can tell us is bad place to be going long now, okay? If you're long, you're going to be sitting in this thing and taking some pain. Look for support levels. Right now, your only support level on this thing is at 23 cents. You can round that to 20 cents, okay? That's your support. If this thing can't hold that support, then it's just garbage. Now, realize something. These coins, and I think part of this, again, here's my conspiracy theory talking. These coins rallied as we're going into a heavy regulatory environment. So someone got sucked in, right? Not realizing it. No one talks about regulations right now. Everyone kind of forgot about that. They talked about it in December after FTX, and now everyone's on, what regulations, right? No one's talking about that. We don't know what the SEC and the CFTC, we don't know what's going to happen with these things over the next few months. It's unexpected. No one's talking about it because no one knows, right? And the people who do know, the insiders, they're certainly not going to share it. So we don't know. These things may get caught. If there's some kind of regulatory pressure or something, and these things are then considered securities or something like that, because something like Cardano has that possibility, then these things, we don't know how that's going to affect these things. It could be very negative. These things may go right back to their lows as a result. Some of these may get, they're going to have all these new costs and all these other things that were never expected of them before. Plus, if they're securities, then they're also going to have to share their financial information, which is something that they don't share, right? So then people really get to know what's going on behind the scenes, right? As far as accounting goes, something that, none of our business right now. So just something to keep in mind, okay? It's a risk. I can't say I know the future because I don't, but it's a risk that you must account for. So that's something a chart cannot tell us. So keep that in mind, okay? Does that help? So I hope that helps with Cardano. Right now, look for supports, right? So I pointed that low. If you want to look at this area as a support here, what is that, 30-cent area? You can look at that, but until there's a setup, don't even touch it. And you should wait, you should think of it in terms of swing trades. Something like this is probably not the best choice for day trades, okay? So let's move along. Good question, good question. I know I spend a lot of time on this. What have I had for lunch? Are you asking me that? Why are you asking me? That's a weird question. I had pasta. I know carbs bad for you. I know. But what are you, a nutritionist? Okay, Farhat, how are you? Opinions on NASDAQ. I'm short. Okay, cool. What do I have for lunch? Who asked that kind of question? All right, so NASDAQ, you're short. Are you the guy that asked me? Someone asked me recently, I think it was a week ago. Someone said they were short and this thing was like squeezing. And I was like, man, I don't know what to tell you. But all I could tell you 2 weeks ago, that was around here, okay? I was saying that we were going into a resistance area, and that's really all you had. And it would probably be a good idea to, reduce your risk, take the loss, and wait for the next signal, because you don't know how far it's going to squeeze, right? And this thing, look at this thing. This thing squeezed all the way up here. That's very painful, all right? If you're short from a bad price, and then you got to watch this thing go here, that sucks. In fact, that probably margined out a lot of people. They get forced out of their positions because they can't maintain the margin requirements, right? That's typical of a short squeeze. Now, look, this looks just like Bitcoin. Is it a surprise? It should not be. I talk about this all the time. There's a high correlation with the stock market and Bitcoin, right? So Bitcoin was most likely rallying because the NASDAQ was rallying, right? So that means that there's really nothing behind Bitcoin. It's nonsense, right? That's basically what that tells me. But the point is this: you're short. This is a new sell signal. So if you're still short, now is a good time to give it a chance. It's an aggressive short, But let's look at the weekly chart real quick. And this is going to affect a lot of stocks, by the way. Okay, so this thing failed in an area where a failure was likely, right? That was a high potential failed high area. Okay, and it's failing. Now, this is a weekly candle, so it's got the whole week to unfold. But today, I mean, this thing closes now in 4 minutes, and it's going to close like that, right? Minus 255 points. That's a nice weak close if you're short. So I would anticipate momentum to continue at least for the next couple of days as you start retesting support levels. Your first support is going to be here. So what is that? 11.6. So 11.6, 11.5. That's what you're looking at. Now, if that breaks, right, you're looking at this area right around here, which is what, 11 even? Yeah, or 11.2. You can probably even round that to 11 even. There's no guarantee that it will get there, but those are your targets. Those are the areas where you're looking for this thing to test. If it gives you a conflicting signal before then, you're going to have to sit through some noise, okay? Keep in mind, we have those economic events like NFP. NFP can turn this thing around. NFP can push it lower. It's binary. There's no way to know how NFP will affect something like this, okay? It can be, especially if there's some kind of surprise. So those, all we can look at are the levels, and we have a sell signal. So I would be looking for this thing to continue this momentum at least for the next few days. And you want to see how price behaves at these levels. If price cannot turn around at these levels, you may see some temporary green, right? But if it just continues through and starts pushing here, then it may be working its way to the range low. Something like that could take 2 or 3 weeks to play out. So I wouldn't expect that this week. Does that make sense? So if anything, you're in a good location now. Like now would be the time to open the short. So one lesson you can learn from this is why you don't short things too early, right? Like you could have shorted it. You may have shorted it here, take the loss. Okay. You may have shorted it here, take the loss again, because you prevent yourself from getting caught in all of this pain. It's very painful. The problem with that is, oh, it's coming back for me. I'm okay now. The problem with that is one day you're going to be wrong and it's not going to come back and you're going to get wiped out. That's what's going to happen. I'm telling you from my experience. Okay, so you're better off taking those losses. This thing's coming back for you. Give it a chance. It's all you can do right now. But if it turns hard the other way this week, don't say I haven't warned you. Okay. So I hope that answers your question. Good question about the NASDAQ. The S&P is probably going to look very similar. All right, let me see here. Let me go back. All right, I'm just taking a look at this here. Can you help us understand how, okay, I mentioned that. So would you say that the bond yields can act? Well, I wouldn't say that you have to understand how bond yields affect everything else. Bond yields are the cost of money, okay? The cost of money affects everything, because if the money becomes more expensive to borrow, less people will borrow it. And I'm not talking about individual retail traders. I'm talking about large companies. They borrow lots of money and they do things with that. They pay their employees, they invest in inventory, research, all that kind of stuff. So that money finds its way into the economy. And people get paid more and they start putting it into the stocks, right? That's how it eventually finds itself. So if money is expensive, then there's less of this activity, right? And it puts like a bearish pressure on everything. If money's cheap, then it puts a bullish pressure. That's where asset bubbles come from. Cheap money, right? That's why NFTs exist. And that's why these ridiculous altcoins behaved in ridiculous ways back in 2021 or 2020, whenever that ridiculous rally came about, because all that cheap money floating around. And then the Fed turns around and says, oh, we're going to change that. And they changed it. So you have to understand the relationship. Google it. There's tons of stuff. Or use ChatGPT. I'm sure it has an explanation, probably a better explanation than me. All right. Anyway, good question. Let me see what else we have here. Can you take a look at Tesla? Sure. Tesla. So Tesla's a market stock generally, right? I mean, look, it's kind of reflecting. It's not getting beat up as badly as NASDAQ, but it's similar, right? It's a similar situation. Look, this type of movement, whenever you see movements like this, the straight up type of moves, don't get sucked into that, please, because it's nonsense. It's just a matter of time before it catches up. These type of moves are not sustainable like this without a pullback of some kind. So this thing, I mean, Tesla hasn't pulled back really for weeks, right? So now the pullback may be coming. look at your support levels. This is your support on Tesla, 120, 124 and a half. You could say 125. This thing's at 166 right now. That's quite a move, right? The thing is, you're at a resistance. You're at an old support, new resistance, and now it's starting to come back with the NASDAQ, which is typical behavior, okay? So again, something like Tesla is going to be affected by rates. They borrow a lot of money, as you know. Lower rates are going to be better for this company. Higher rates are not. I believe they had their company report, what, like a week ago? So that may explain this large green candle. Anyway, I wouldn't be buying this thing now. Wait for the pullback. This is a red inside bar. Basically, if it takes out the low of that candle tomorrow, you have yourself a sell signal, okay? So if you're long, you got long recently, you have a warning sign. Basically, you have a conflicting signal developing there. All right, by the close, it's closed now. At the close of the day, it's closed. All right, so it takes out the low tomorrow, you have yourself a sell signal. How far it goes is another story. If NASDAQ and S&P pull back hard this week, this is likely to follow. Make sense? You should use the NASDAQ as your gauge, okay? So you would say that bond, okay, I answered that question. Okay, I answered that. Since people are asking about their shorts, I am short Netflix. Went in on 363. Okay. Netflix. Netflix, I know, had a pretty amazing move. NFLX. So, I mean, look, this stock is generally strong. Okay. I mean, look at this chart. This goes back all the way to May. This is a bullish trend going back. I mean, that's like a short-term and mid-term trend that's bullish, right? You have higher lows all over the place. So it's pulling back now. You're in from 363. That's not a bad price. You're short off that high. The thing is, you're in a counter trend trade. So you should be looking for this first support as a target. Don't make the mistake of thinking the target's going to be over here, because now you're expecting a lot. Okay, anything is possible, but you're fighting the trend at this point. So look for the nearest support. That's around 332, maybe 325, 320, that zone right there. You're looking at this area. That's what you're targeting. The thing is, to manage risk on that, just make sure, you should probably use a stop, and it should probably be around 370. It can turn around and stop you right out. This is a strong trend generally. So that's all I can say. Now, if it cooperates with you and you have the ability to partial out of it, then the first partial I would suggest, I'm not telling you what to do, would be that area. If it clears that area, then you're looking at this area. Okay, that would be a great position if you can manage it that long. But just keep in mind, it's not going to go in a straight line. Okay, it's going to gyrate around and all that other stuff. And because it's so strong, it may find itself consolidating in this area here, right above that old resistance, new support. So please keep that in mind. Whatever you do, don't get strongly opinionated on the short side. That's all I can tell you, right? It doesn't matter what you think of the company and how badly they spend their money and all this other stuff, because if they were really that bad, what are they doing here? Okay, and we could look at a weekly chart. I know they were a lot higher. I mean, I know this thing was like $700 or whatever it was. I mean, yeah, that's ridiculous. Right? So you can say, well, this structure is bearish. You can say that, but the thing is, this structure, this bullish retracement, is still in play. Okay, and before the broader structure asserts itself, it needs to break supports. So when Netflix starts taking out 288, or basically you see Netflix below, starts pushing 250, then it would be more reasonable to anticipate that the broader trend is reasserting itself. Does that make sense? That's what you're looking at. Okay, so respect the midterm structure here. That's all I can tell you. So I hope that helps. Okay, so let me go over here. Okay, Tesla closed. Oh, great. All right, so I'm just going back here. A few more minutes. Okay, Fed funds rate. Okay. I'm just going back, trying to catch up on the chat. Thanks, you guys, for participating and asking all these questions. Okay, just catching up. Just here we go. Catching up. Okay, so all right, Avi. All right, so Avi. So QQQ. Everything that I said about the NASDAQ applies to the QQQ. All right. So again, I went over the Romanian one. Okay. Hey, Han from the Netherlands. How are you? Good to see you again, a student. Okay, greetings, Turkey for Levant. Okay, Tesla, just got it. Okay, cool, Levant. Thanks for joining from Turkey. Oh yeah, people have been putting their location. I always say if you want to put what country or what city you're from, it's always a fun fact. I should have said that an hour ago. Anyway, silver, monthly looks bullish. Weekly got big pin bar, okay? Silver, let's take a look at silver. XAGUSD, silver. So look, silver is basically a play on the dollar. I know there's other things that move silver. This is the daily on silver. Silver is also going to kind of react to gold. Right now, this thing's at 23.54. Look at the consolidation, right? You're in a bullish consolidation on silver. This is generally bullish, right? This structure right here is bullish, going back to October, and it's consolidating. And you're basically fooling around in the middle of it. Okay, bad spot for new positions. I would not touch silver here. If you're interested in a long silver, let's take a look at a weekly chart. If you're interested in a long silver, now silver and gold have been gyrating for quite some time. And now we have a dollar that may start gaining momentum, bullish momentum again, possibly. If the dollar starts doing that, these things are going to pull back. Okay, they have no choice. So look for the supports, $20 on silver, right? Look for $20 on silver. I think it's too early to start buying silver now because you're buying near the range high. I mean, look at this thing, right? Just going back on the weekly, this is your range low. What is that, around 16 or 17? 17.55, right? And your range high is somewhere around there, and you're just fooling around here basically in the middle. Bad place. Okay, so I would not be taking new silver positions or anything related to silver. And it's basically a play on the dollar. Okay, so if you're looking for silver, wait for good prices, right? And your good prices right now, you're looking at basically $20 or 19.5. It may take some weeks to get there. Just keep that in mind. But that's the more probable area. And that's assuming that the dollar shows us a little bit of a rally and the dollar gets stuck at a resistance and turns, then silver would probably be in a good position. Same with gold, okay? For some longs. You can take advantage of gold miners, silver miners, that kind of stuff as well. All right, so I hope that answers your question. Yeah, so you got it. You mentioned it. Look, 20.5, realistic pullback, yes. Okay, or 19.5 could be too. Yeah, okay, you got it. They won't cut till next year. Okay, well, we don't know. Unless you know Chairman Powell personally, we don't know. He may not cut, but he may say he signaled that they were gonna raise at a slower pace, and the market seemed to get all excited about that, right? And then he may just come out at some point and say, okay, we're just gonna stop, right, before they cut. So it's not like cut or no cut. They could just say stop for a little while, and they say we're gonna raise just a little slower. I mean, who knows? So don't get too caught up in that. All right, I just asked ChatGPT why, and it replied. Good answer. Yeah. All right, cool. Question, log versus linear. I'd like to know what is better to use. It doesn't really matter. What do most traders use? It doesn't really matter. I mean, one is just going to show you more basically detail than another. If it's going to have any effect, it's really going to be for very small time frames, in my opinion. So it doesn't really matter for the bigger picture. You can use either one. Okay, I mean, on mine, I'm using a log chart on mine, and I've always used that. I don't switch back and forth. Okay, so good question. All right, let me see what else I have over here. Okay, nat gas. All right, and I am going to take my 5% and run. Okay, I know it's not financial advice, but that was very okay. All right, well, that's the whole idea. I mean, the idea behind these streams and the articles that I write is to provide perspective. What you do with that perspective is up to you. The thing is that your goal should be to mitigate risk. Okay, the way you win in this game is by controlling losses. It's the only thing we can control ourselves, right? Not everyone thinks, well, it's about making money. No, it's not. Making money comes from small losses. Right? If you can make a loss very small, you have to assume, you have to go into this game every day assuming you're going to be wrong half the time. Okay, all the frauds out there, they plant seeds of hope and they tell you the opposite. They say, oh, I'm going to show you a special thing and I'm going to help you make money. No. Okay, you have to understand that this game is a highly random game, and most of the time it's stacked against us, okay? So it's safe to assume that we are at a 50% win rate most of the time. If that means you're going to be wrong half the time, that's why you can't grow small accounts, okay? That's why consistency is so hard to come by. That's why it's hard to build an account without having a lot of money in the account, because you're going to be wrong half the time, and you never have the opportunity to know when to get big, right? That's why. Market's random. You may win this time, but there's no way to know if the next time you're going to win, even if it's the same exact setup and the same exact everything, 50%. Okay. So you have to keep that in mind. So one thing we can control in that 50% situation is how much we lose. So if something turns on you, like let's say, for example, we have a day trade on, for example, and this really applies a lot to day trades, if anything, mostly to day trades. And, you're looking to make $2 in the trade, okay? And your stop you set at $1, but you have the opportunity to get out for only a 25% loss, a 25-cent loss, because you get a conflicting signal, or maybe a 50-cent loss, and you get out. Okay, you've just reduced your risk from $1 to half of that. Okay, that is how you make money, because if you won on that trade, right, you would have won $2, which is reward risk wise, that's a big jump from what you just lost. That is how you make money in this game. No one will tell you that, okay? Because no one wants to talk about losses, because somehow none of these fake gurus on YouTube lose money, and somehow all of them drive Lamborghinis, except for me. I don't drive them. Okay, so anyway, let's go over Nat Gas. All right, so what is that? Nat, they're really giving Lamborghini a bad name. Nat Gas. So, ooh, look at that. That must have something to do with the Russian situation. Let's take a look at the weekly. That is the weekly. Man, yeah, so that is a pretty harsh move, okay? Look at this. I mean, clear head and shoulders. I don't put a lot of weight on that pattern, but let's look at the levels. The momentum is clearly bearish, okay? Bearish. You're pushing into old resistance levels. You blew through all these supports. I mean, this is, so you might be thinking, the first thought I would have here is, how can I get long this? But you're fighting some serious momentum. So let's take a look at the daily chart. Something like this, it looks like this is basically a function of the dollar, it seems as well, right? This pullback looks very similar to that dollar situation. Don't fight this thing, okay? A squeeze may be coming. So if you want to take an aggressive counter trend trade, I mean, this is so extreme. And also, a lot of times before a squeeze comes, you see something like, see this price action here? It's a lot of overlapping. You see that? We saw this in Bitcoin too, similarly, before it started to pull back. You see a lot of overlapping, right? So that overlapping can be a form. Someone mentioned accumulation earlier. It could be a form of that. And it keeps pushing lower and lower and lower until the squeeze, right? So a lot of times before you see that move, you'll see kind of something like this overlapping price action, but it's still pushing lower. That's why it's very hard to get involved in something like that. So in a situation this extreme, certainly wouldn't be looking to short this, because I don't care what the fundamental situation is, this is a bad place for shorts, okay? The place to short would be resistance, and that's like way over here. Not even, it's like a little higher than that. So look, you have two pin bars previous. You have this candle here. Wait till the pin bars are taken out. Pin bar high for an aggressive long, right? But keep a tight stop on that in case this momentum wants to continue, because you are fighting momentum. It's very conflicted. All right. I mean, I personally wouldn't do anything with this, with Nat Gas, but that's what I'd be looking for. This is going to be sensitive to the dollar, and it's going to be sensitive to any kind of geopolitical changes, which can come out of nowhere. Just don't get caught in this short at these prices, because the potential there to squeeze is high. Okay, just wait for a better setup, because there's nothing there. Does that make sense? Wait for a setup, or at least for some resistances to break. Okay, you guys. So do I have any other questions? Any questions? Some good questions here. Good questions today. How am I doing here on TradingView? You guys still listening? Let's see. Let me refresh this over here. Okay, yeah, I got some people listening. Okay, cool. Let me see. Any other questions? Let me see what I have over here. Okay. All right. Any other questions? How about here on YouTube? Any questions? Okay. All right, you guys. So I hope you got some enjoyment out of this, but more importantly, I hope you got some perspective. Okay. Like again, and I put the Bitcoin chart back up on here because just having the perspective is what warned me about this before it came about. Now, keep in mind, I get criticized all the time because I couldn't call this move, right? All the geniuses out there, oh, I called it. Yeah, anything could have happened here, right? And you have to understand there's a little trick that they like to play because they know markets are random. And what they'll do is they'll make calls until eventually they're right. And when they're right, they come out and they parade, I was right, I was right. Meanwhile, they were calling it long and short, okay? And then they just go on the one that works, and they say, "Oh, I was right all along." Meanwhile, they were calling longs all throughout this. Okay, so please keep that in mind. Markets are random, and anyone can be made to look right. I called this thing yesterday. I mentioned I never made a call. I just said the risk was high for longs, and the market agreed. Okay, so it was that perspective, having the grasp on the wave count and the location that allowed me to see something that you cannot see on the chart, and that is probability. Okay, now probability, I just want to say this before I wrap this up. I just want to say this. Having a sense of probability is going to keep you out of winning trades sometimes, right? But you have to look at this like a poker player. It's very important. In fact, there was a professional poker player that actually agreed with me on this. And I'm not a poker expert, all right? But the thing is, there are certain cards that you get when you're sitting there at the table that most of the time are garbage cards, right? Most of the time they're very low probability cards. But there are occasions when these cards would have turned into a big win if you had bet them. Now, seeing something like that will reinforce a very bad behavior. You're going, oh, this 3-8 offsuit could have made me all this money. I'm going to play it the next time I get it. And meanwhile, it's a garbage hand that has a very low probability of producing anything over hundreds of hands. It's the same thing here. Okay, when something is low probability, it works on occasion. But if you get sucked into that nonsense, next time I see that, I'm gonna do that. You're just playing a low probability game, and you will lose over time because you have to look at this over thousands of trades, not one. And a lot of these fakes out there, a lot of these frauds, first of all, they don't have the adequate experience to be sharing the information that they're sharing. And if you're mindless and you believe them because they appeal to your emotions, then you can only blame yourself. You'll win here and there randomly, but you will find yourself in a very unpleasant situation if you continue to follow such people. Okay? Understand that people who don't use real names and people that don't have any professional background of any kind can have, there's no accountability. So they can say whatever they want, okay? Keep that in mind. And when you're free to say whatever you want and you need to make money somehow, then you appeal to people's emotions. It's like selling shoes. Hey, I got these shoes. And if you buy these shoes, they're going to help you get a really pretty girl, right? And guys that are desperate for pretty girls are going to buy these stupid shoes. I only said that to sell the shoes. Okay, and thing is, you buy the shoes, you put them on, you still don't get the pretty girl, but you're like, I still kind of like the shoes, and that's it. Your risk is over, right? You're not constantly exposed. The problem with the market is you are exposed all the time. You take a position, and now you get stuck in the position. So it's not like a one-time, okay, I lost a couple of $100, no big deal. It can turn into your account getting wiped out. Okay, so I know I went into a rant there, but please understand that concept if you're new. It's very important. All right. So I'm going to leave you with that. If you know where to find me. If you have any other questions, I hope you found perspective here. I hope you found some useful information. If you have any other questions, just check the signature in the links portion of TradingView or on YouTube. If you can, press the like button and subscribe and all that other stuff. It helps me out with the algorithm or whatever. Okay. So again, thank you all for joining me. Enjoy the rest of your day or the rest of your evening, wherever you are in the world, and thank you for watching.